Dear Teroxx community, welcome to our weekly crypto news and market update video. Today we will talk, of course, a little bit about the Bitcoin ETFs, but the ETFs are now a few weeks old. Everything seems to be fine and everything seems to be normal. So now it's maybe time to think and talk about different things that could create a hype or could follow in 2024. And of course, trend number one is Bitcoin. The Bitcoin ETFs were a huge catalyst. The Bitcoin halving is as well a huge catalyst. So keep an eye on Bitcoin. Whatever Bitcoin will do will lead the market. RWA, real world asset tokenization, could be a thing. A survey from Ripple showed that 72% of finance leaders plan to adopt any way of tokenization in their businesses within the next 3 years. Gamify gaming with the implementation of blockchain, of play to earn, of hybrid system, whatever it could be around, could be the next thing based on gaming, a multi-billion-dollar industry, and trend for AI. AI was a hype in 2023, and now in 2024 could be the year that AI is really making a difference, and that project based on AI or working with AI are showing the first results. So take a look on this. This could be something to watch for in 2024. Bitcoin ETFs are wrapped in thin layer of indirect regulations, the CFTC chair said. He said that even now that the ETFs are approved, it does not mean that the SEC will approve the whole industry. So keep an eye on this. He said that there remains nothing firmly in place to address the inconsistent practices in the cash markets for digital assets. He as well said that Gary Gensler said that he will approve the Bitcoin ETFs, but everything else he will and won't accept. So this is why the regulation is kind of lacking in the USA. And he said as well that they need to settle down this trade settlement, the conflicts of interest, data reporting, cybersecurity, and stuff like this, because they need to catch up to crypto-friendly jurisdictions. Otherwise, the USA will not be in the top level of the crypto adoptions and maybe losing one of the biggest technology upgrades for the next years. The BlackRock IBIT Bitcoin ETF crosses 2 billion in market cap and is showing how much interest is there. You can see it above $2 billion, the market cap of these ETFs in more than 10 to 11 days, and this is quite huge. So this as well showing that BlackRock is leveraging its market reputation as the world's largest asset manager to attract broader audiences to its crypto-based product, and they are not wants to include the, so to speak, normal and young Bitcoin community. BlackRock choose to communicate to baby boomers with 2 minutes videos featuring the outlining Bitcoin's value, and of course the fee war, so to speak, is as well a reason why BlackRock is doing so good. Here you can see it in full screen, all the needed details that you need to know about this ETF. And now Bitcoin went down a little bit since the ETFs were approved. It's a, so to speak, sell the news event and stuff like this. But the outflows seems to go down a little bit. If we're taking a look on the weekly in and outflows, the outflows in the previous week were quite huge, of course. But we need to understand what really happened, because the ETFs had a huge volume plus. Then, of course, Grayscale needed to sell and needed to restructure everything, and is having huge weekly outflows, with outflows year to date of above 5 billion. All the others are quite fine, and you can see the most flows are based on Bitcoin, so it's manageable to say it's at least a bit of the Grayscale investment things. And the United States had a weekly outflows minus, but are in the year to date inflows positives. So it seems that Grayscale is now at a point where the sell-offs are getting slower and slower, and this meaning that we could have hope that we see for short or midterm positivity in Bitcoin, because when Grayscale is lowering their outflows, it's an emotional sign that it could spike and could go up in the market. So keep an eye on this. This could be a good thing to watch out in the coming week. And take a look on the 7-day performance. We can see Solana and Avalanche in the greens, Bitcoin a little bit, all the others are down a little bit. So really nothing happened in the market that it's worth to talk longer about. It was just a normal week of trading with a little bit up and downs and two good performing assets, so a little plus in the market cap visible as well. So let's talk about Bitcoin once, because last week, and this is now as well the Grayscale theory, as the market opened on Monday until Tuesday evening, we saw this huge outflows, emotional triggering the market or the people on the market with this sell-offs. The buy volume, the long leverage were liquidated. We saw a downtrend in the market of nearly 8%, with a support building at or below 39k. Then finally on Friday, the market managed to have a quite positive day after we've seen a first rebound and then a second uptrend on Friday, as a lot of people bought Bitcoin with an uptrend of around 6%. Even the weekend was not that low volatile than the other weekends ahead. So this Friday really changed the market. And now it's Monday morning opening of the futures, and Bitcoin is slightly up a little bit. So it's not having these huge downtrends like the previous week as the futures opened. So this is giving hope that the market, that Grayscale is maybe not selling this week that much Bitcoin, and this could be a positive sign. So we have a small and very tiny support zone down here at 41,500, and of course the bigger run around 40k. So it seems like that the support, the consolidation is over, and that maybe now new volatility is ahead when there are no huge sell-offs reported by Grayscale. I could imagine that just because the emotional trigger for the market participants, Bitcoin could go up within the next week. But of course, this is just one indicator. You need to keep an eye on multiple indicators and multiple market movements to see the clear trend. But for the moment, Bitcoin up, and this is quite a good sign. But, and this is why we always should take a look more and deeper on the market, Bitcoin is down since a few days and weeks, and the S&P 500 just touched new highs. So the correlation of Bitcoin and S&P and Bitcoin and Nasdaq is going down at the moment. Last time this happened, Bitcoin went down, S&P went up, but then crashed. Bitcoin then went up, but S&P 500 needed a little bit of time to catch up again. And then the correlation was quite strong. Now Bitcoin is as well going down, while S&P is touching new highs, could lead to the fact that the market may be seeing a recession, coming down a little bit, pushing Bitcoin into a consolidation with a slightly negative trend to come maybe, or a positive scenario, the correlation is going up and everything is just flying. So this is why we do not have a clear midterm trend visible. Keep an eye on this, adjust your risk, and then I think you should be fine in this market. Here you can watch another video of ours, or you just subscribe to this channel down below to never ever forget or not seeing a video that we are posting. Have a good week, stay humble, stay cool, and we hear us next week when it comes to crypto news and market update provided by Teroxx.